Well, what an exciting night we had last night. Good morning. Welcome to the Jim of All Trades channel. Glad you made it here. I'm Jim. I'm a crypto trader and a Forex trader, and I'm here to help you understand the market from an Elliott Wave perspective. I am an Elliott Wave trader, and I give daily wave calls and wave trajectories, kind of like a weather forecast, except it's a wave forecast, and I hope I'm a little bit more. In fact, I hope I'm a lot more accurate than your weather forecast is. Last night I had a bit of a scare, and we were talking about it in the live stream, and I was trying to map it out, and man, that wave went a lot deeper than than I hoped or expected. But I also mentioned the possibility of it. I also said I didn't like it, but here it is. So we need to talk about this morning and just talk about this market a little bit, so you know what you're trading against. Okay, so got lots to talk about today. We are looking fantastically good right now. We have an impulse right now to the upside in Bitcoin. That means we've got upside to go. We're going to get those upside targets that we've been looking for. So what does that mean from an Elliott Wave perspective? And so let's look at that, and we'll jump in. Don't forget, this is not financial advice. It's never intended, ever, in any of my videos, are intended to be financial advice. I'm simply telling you how I view the market, how I read the charts, and what I expect from them, and then how I trade the charts, how I personally trade. A lot of you guys ask me, what would you do? I can only tell you what I would do. I can't tell you what to do. I am not a licensed broker or anything, or a financial advisor like that, so I'm unable to do that. Okay, so I haven't given a lengthy disclaimer in a while. I just want to make sure that's clear and what we're doing on the channel. I do want to help protect you, though, from making bad decisions, and so I will try to show you the pitfalls of trading and where your trading is going wrong and why you're losing trades. I'll try to help you understand that. So with that being said, let's jump into the charts. I need to clear my throat a little bit. I've got a cough. I'm going to turn my mic off just for a second. All right, there we go. All right, now we're looking at Bitcoin right now. We'll look at Bitcoin. We'll look at Litecoin and Ethereum as well. And let's just jump in. We did look heavily into the chart last night, but I think we need a fresh pair of eyes. Let me ask you just a question first of all. How were your emotions last night, as if you were watching this price, and maybe you were in long, maybe you had an entry right here and you're expecting it to go long, and how were your emotions when you were watching this? Did you cut the trade properly underneath that low, or did you hold the trade and then freak out? There's a couple plays you could have done. You could have kept your wits about you, and and held their trade, and then just held it for all of that. That's what I did personally. There's reasons why I do not use stop losses, though I do cut my trades when it's appropriate, but there are reasons why I don't use stops, and we'll talk about that one other. Maybe I'll get to it in this video. I'm not sure, but I do manually stop my trades out. But if I feel like the price is going to come back, I'll just hold the trade and I'll just be patient through it. But how were you? Were you freaking out? Um, that move last night was designed to do that to you. Okay. Let me just ask you a question. Are there enough retail traders? Now, you and I are the retail traders. If we just add up all of our money, do we really have enough money? And the cumulative thought process that all of us are thinking the same thing to be able to make this move happen? Was everybody in the market, retail, on the retail side of trading, thinking, we need to sell? We need to sell. You know what? All of the people that I've been teaching and talking to, and many of the traders that I'm talking to, we're expecting upside move. Okay, we got a downside move first, and now we're getting our upside move. Okay, it's the way the market often happens. Now, why does it do that? Why does that happen? Because the people that really run this market, the companies and the money that really run this market, are market makers. They are liquidity providers. A liquidity provider is a large hedge fund, a large bank, a large institution with billions of dollars, and they take buys and sells on any side of the trade at all times. In other words, if you want to sell to them, they will buy to you. They will buy from you. If you want to buy from them, they will sell to you at no matter what the price, whether they lose or win. Now, they will do that with some of their funds. With the other part of their funds, they are trading the market in such a way that they make money. they're also hedging their funds in other areas, in other accounts, other places. So that's how they're able to be liquidity providers. And they do that so that the market stays liquid. What that means is the market is always moving. It's not stagnant. It's going up and down. There's liquidity. That means there's trades available, and that means we're able to capitalize on that. This isn't evil or nefarious. It's just how the market works. These liquidity providers, they move the market. They're called market makers. They make the market. And they do it through bots and algorithms. They have computers that do all the trading for them. They don't have any person on the other side of the screen saying, "Ha ha ha! How am I going to get them?" No, they have computers that are programmed to take your money and because they cannot make their own money unless someone else takes the opposite side of the trade. Well, who are they trading against? Well, they're trading against you and me. Okay, they're trading against. They're trading against retail traders, because if they want price if they want price to go up, they need willing sellers. Okay, so they have to create, with their own money and liquidity that they have to create the sentiment that price. Man, price is really moving right now. I love it. I'm in long right now. So they have to create the sentiment, okay, that price is going down, okay, so that people will willingly sell their positions because they're afraid. They create fear and they create the liquidity, okay, by pushing the price down. And that's what they did last night. It was a maker move. It was a market maker move. Okay, and what it did to you is it created fear and made you question, made you get out of your trade. Your stops were hit if you had stop losses set. They came all the way back down to the bottom and they barely wicked past it, and then they reversed straight off of it. Slowly trudged for a bunch of hours, and then this morning at 2 a.m. They started taking the market up. Okay, and what we have now is an impulse move to the upside. This is the impulse move I've been saying. This is the move to the upside that I've been waiting for. There's no way I could have known exactly how that was going to play out. I did share this scenario yesterday in the warning video. I said we're getting our H that I always talk about. It comes back down to the low and then goes up. Okay, that this is a great entry down here if you get it, but you never know if you're going to get that or not. This might be. This was a fantastic entry here. Okay, that was a fantastic entry because it really looked like we were getting a reversal. It was measuring properly. It's the best you can see. For with trading, there's always risk, guys, and you never know what the market's going to do. That's why you have to know how to manage your money properly. Now, a way to handle that last night would have been to enter here, and then if it comes past your entry, you stop it out. But you don't just stop it out and quit. You stop it out and look for re-entry. Okay, because this market is saying up. It's been saying up for ever since we had this first two waves or three waves. Once we had these waves, I'm thinking, okay, and particularly when we had this wave. Oops, sorry, not that. This wave right here. That was a good telltale that we were going to be heading up as well. So anyway, I want you to understand that this is what the market makers do, and this is why you freak out, and this is why you're losing your trades. How do I know that? It's because that's how I lost all my trades in the beginning. That's how I lost all my trades. Let me just show you a trade I took last night. Okay, and I'm now out of the trade, but let me show you the trade that I took. I took this trade right here on the Forex. Okay, I got in the market right about here. Okay, right as I got in, the price went down and it was looking good, and then it reversed on me, and there was this wick. Okay, and without any of this other stuff right here. Okay, it appeared like the trade was going against me. I said, oh, I mean, just imagine what the chart looks like without being able to see. Well, hold on. Come on. Chart's a little slow to load here. Hold on one second. Let me reload it here. Ugh. Sorry about this, guy. My computer's lagging a little bit. Let me just want to talk some psychology with you because that's part of the training of this channel. Okay, so just show you what the market looked like. You might be thinking this market's going up. Well, I know the market enough to say, okay, this market's going down, right? My entry was, I entered like, hold on. I entered like right here, but it put my entry down here because of the spread. And then the market just went away, okay? And then here's what the market did. Now let's just replay it. I'm just going to replay it. It started going up, and now I'm feeling like, man, did I choose the wrong? And then, nope, it came back down on me. But right here, there was in that 15 minutes to 30 minutes, there was indecision, or actually it was 45 minutes I had to wait through. Price was going against me, and I had to think, am I going? And so what they do is they do that fake out, and then they go down to the downside. So you can see that little candle is designed to get you scared as well. They're trying to shake you out of your trade to get you to question your trade. Well, at the end of the day, I took the trade all the way down for 50 pips, and I got out like right here. Okay, now we might be going down a little bit more, but I doubt it. The RSI needs to cool off. It's probably going to come up. I do believe this is going down, but I'm waiting for it. But anyway, that's just an example of what the market will do to you. Okay, now look at this instance right here. I actually took this trade right here to the upside and got out right here at the 1-to-1 extension of this move right here. And then it came down. You think, oh, it's reversing. So I actually reversed that trade and made that trade as well. That was 50 pips up and 50 pips down. That was a great trade. But look what happened right after that. All of that time it took. All these candles are 15 minutes. And then in 4 15-minute candles, they take it all back and they go against you, really. But look what they're really doing. They're really coming down. The price is going to come down. And this is where they're taking it. But why do they do that? Because if anybody entered their trade here, they want to make sure they shake you out of your trade so you're not able to capitalize on your profit, and they want to profit off of your letting go of your trade. And so that's the way the market works in all markets, whether it's the Forex or whether it's Bitcoin or Litecoin. I personally find Bitcoin and Litecoin easier to trade than the Forex. I find the Forex a little bit harder than crypto, and so be careful entering into the Forex world. But once you understand some things, you can really trade, and if you have a good strategy, then you can really profit from the market. So I wanted to have just a chat with you about psychology today and what happened last night. This was a maker move to get everybody scared into selling. And they just took the price up. Retail traders didn't do this, guys. Retail traders aren't thinking cumulatively like that to be able to do that. We're not. Retail traders are probably 50-50 here. 50% thinking it's going up, 50% thinking it's going down. And so who's going to move that market then? The market makers will move the market, and then everybody begins to follow on their coattails. And so that's the way the market moves, and that's the way it's working. So what we need to do now and say, okay, where is Bitcoin headed? And sorry for that long treatise there, but that I can't, guys. If I didn't give you any more information than what I just gave you, and if I didn't tell you where I think the market's going today, I just gave you some of the most valuable information that you'll ever hear if you're trading this market. You've got to understand who you're trading against. If you don't understand that, you will be in this mindset that well, that's just the way the market works. No, it's not. I mean, yes, it is the way the market works, but it works that way because there are people that are trading against you, and they're designing the charts. They're printing these candles in order to incite your emotions. So I want you to get that, okay? All right, so where's price heading? Well, let's put the fibs on here. It looks like we've got a flat correction now, okay? We've got basically our high right here. This actually, we've got a three-wave move here. Then we've got a three-wave move here, and this could be like let's see if this is an expanded flat. No, that's not an expanded flat. Let's not consider that. Let's take it to the high here, and then all the way down. So our next target right now is 83.30 to hit the high again, but then we have another target here based on this at 85.06. Okay, 85.06. So our two targets to the upside, taking into account the entire Fibonacci extension of this move to that move there, is looking like in between 83.30 and 85.06. I think more likely we're going to hit the 85.06 target. More than we'll have to see what price is doing at 83.30, but we'll probably come up and hit that 1276, unless the wave structure shows us something different, which we'll have to look at shortly. Okay, so what should wave structure look like? Well, we've got an impulse right here, right? Should expect a 3-wave retrace down to the downside, and then we're expecting a 5-wave impulse to the upside. Now, if we throw the if we did, if we guessed what that's going to look like, something like that. We have a perfect confluence of fibs right here. If I come back to the structure zone right here at 8,500, guys, 8,500 is going to be my call. Watch 8,300, but 8,330, watch that area, but 8,500 is really a nice zone. It's a perfect confluence of Fibonacci's right there. So I would be watching that. Looks like we're going to get that, and then my play after that is going to be to take it short from there, from that area. Okay. Now we are going to get a 50 to 60% retrace right now, so be careful here. Watch out. I'm not telling you to sell or anything like that or to overtrade. I'm just telling you that that's what we can expect, a 50 to 60% retrace of that wave. Chances are it's going to come down to this structure zone right here. Could come down to this structure zone right here or right here, but there's a lot of structure right here that would support price to come. See this structure right over there, this structure here, that little structure right there. There's a lot of structure there to support price coming back to here. If I put the retracement tool on that line, I would imagine that's going to be that's the 618 right there. And so there's the 618. So you see how structure lines up with the Fibonacci's. Okay, so once you learn that market structure, guys, you'll begin to understand this market. So we're looking for basically a 3-wave move back to the downside here, and then we should have a 5-wave impulse move to the upside. It's going to be pretty quick potentially, but that's what I think we're going to get, something like that. Okay, that's my call for today. Be careful. If price comes back down to the low and breaks the low, we're definitely going down. But I don't know how to construe this any other way than a 5-wave impulse. It's a very clear 5-wave impulse. I've already measured it. I'm not going to show you, but it measures impulsively. There's 5 waves right there. I don't know how to look at that any other way. That's a beautiful 5 waves. Okay, so there we go. That's 5 waves. We're going to look for a 3-wave back. So if you're not in this trade, wait for this pullback. Wait for, if you're trading it, you wait for this, $7,800, $7,900, then you go long. That's what I would do if I was not in the trade. But I'm in the trade, and like that. All right, let me look at the 15-minute chart, see what we're seeing here. Actually, not seeing much. Let's see what's on the 2-minute chart there. Okay, on the 2-minute chart, we just have a straight up move and we came and hit the top at the 2618. We might have one more hit to the high, and then likely we're going to get that 3-wave move to the downside. So be careful there. Lots of impulsive action happening right now. Not suggesting you trade this to the downside. I'm not suggesting it. I'm not recommending it. I would trade the upside quicker. I believe. I don't know. It's not necessarily a bad play to short that right now. So. All right, let's look at Litecoin as well and see if we can get a price update there. Looks like we've got an impulse move here. We got a 1, 2, 3, and 1, 2, 3. Now we're getting an impulse here. It looks like we're getting a flat correction right there. Once this is finished, doesn't look like it's finished quite yet. Maybe. Let's measure this guy right here. Yeah, this is an impulse wave here. It might be finished, but it might have one more hit to the upside. That might correlate with Bitcoin's one more hit to the upside. I can't be certain about that hit to the upside, but it's looking likely. If you get that hit to the upside, we're going to get we'll have 3 waves up. What I would expect then is a correction and then another 3 waves up. So we're going to get a wave shape looking something like this. I'm guessing here. 1, 2, 3, 1, 2, 3. 1, 2, 3, and that's going to get us up to our $59 target. Still looking good for our $59 target, I believe. Let me put the Let me get rid of all these old targets, guys. I mean, they're not old. They're just targets that I've set earlier, and they're all in the zone. 58.77 looking good now, and then 60.60. So we got to adjust those slightly with the way price action came. 58.77 or 58, yeah, in that right in there. 58.75 and 60. Okay. All right. Let's look at Ethereum as well. Still looking good to the upside there, though. Um, just talking, not to get too locked into one mindset. Sorry, my chart is just hugely messy. I apologize. I do a lot of teaching, a lot of charting other places. I want to make sure that you're ready for the potentiality of. I mean, we got 1, 2, 3. We got 1, 2, 3. We could get 1, 2, 3 in Litecoin before we go up as well. So be aware of that potentiality. Could make a new low there. Wouldn't be a horrible idea if price comes up here on a fifth wave to take your profit and wait for entry and see what kind of wave you get to the downside. But you got to be able to watch the chart and trade that. Not recommending it, but if you're a day trader, know what you're doing. Not a horrible idea. Okay, like Ethereum. Let's see what Ethereum's doing here in this wave. We've come up to the 1276. That's a corrective structure, but this is an impulse. An impulse. We need a fifth wave to the upside. That fifth wave doesn't look complete yet, like Litecoin, but it might be complete. So understand that we're still looking for a three-wave pullback here as well. So we got three waves here, three waves here. So are we going to get three waves down to the downside, or is this, or are we going to get, a small three waves, and then we're going, like that up to the upside? Our upside targets are still in play right now, guys. Upside targets of about 190 are still in play. They're not invalidated yet. When do they become invalidated? They only become invalidated when we break the low here. 189.80 and 196.64 are the new targets there for the upside Ethereum. Potential low side on Ethereum. Could come back down to 163 to 159. Could come back down there. If it becomes, see, this is three waves. It's not impulsive. There's just no way that's an impulse. It can't be. There's just no way it can go. It's not going past. Ethereum's chart is really, really clean and nice. So, all right, that's a long video today, but there's the information that you need today. Really, really take to heart what I was sharing you about the psychology. If you made it this far in the video, just let me know. Let me know that you made it in the comments. Let me know what you learned today, if you learned anything, and let me know what questions you might have. I'd be glad to help you any way I can. If you need some more one-on-one help, you feel free to join my Patreon. I've got 2 tiers of Patreon membership. You can read what's offered through that. Just click on the Patreon link in the description. Until then, you guys have a fantastic day. We'll talk to you later. Bye bye.